Hello and welcome to this special episode of Closing Bell with me, Yatin Mota. You're watching this broadcast live on Moneycontrol's platform. As far as the markets are concerned today, it was a very volatile session, especially for the first 2 hours. We saw deep up and downs coming in for the markets. Obviously, there was a knee-jerk reaction in many large cap stocks, especially the likes of TCS, which we'll be discussing in the show later. But if you talk about the markets right now, they have been successful to close above that 17,100 level. Right now, the Nifty on a provisional basis has closed 140 points up. Sensex also has seen a smart gain of nearly 450 points. So, after the first 4 or 5 trading session of the week, today was the market for you, which traded in the green. Obviously, thanks to Nifty Bank, which rallied almost 1.5%. Mid cap and small cap indices also rose nearly 0.5% on an average. Advance decline ratio, which in the morning was 2:3, now reversed in the closing trade by almost a big margin. Now the advance decline ratio, which I can see on the NSE, is 2:1. So for every 2 advances, there was 1 decline. As far as sectors are concerned, today we had real estate, metal and financial services stocks which rallied in trade. Obviously, as I was mentioning, the banking stocks also outperformed the markets. Losing side, we had auto, pharma and media stocks which were trading in the red with some negative bias. But yes, if you look at the markets, some strong moves coming in, especially from the HDFC twins, wherein NCLT has approved the merger. The order copy is expected soon at the NCLT website, so we'll watch out for that. Apart from that, IT stocks were in focus. HCL Technologies, Infosys, all of these stocks are showing smart gains. HCL Technologies, as I can see, almost 3.5% coming in for that one. Hindalco, Ultratech Cement, JSW Steel, cement and metal stocks were shining in trade. In fact, China today cut its reserve requirement by nearly 0.25%, which meant that there will be some good liquidity in the Chinese markets, and that is supportive for metal stocks. And that is why we saw the domestic metal stocks rally in trade, especially after the news at around 2:30 came in for the China reserve requirements by the central bank. Losers, we had NTPC, Maruti, ITC, Eicher Motors, all of them closing in the red, almost 1.5% down. But yes, today's newsmaker to focus on will be TCS. The stock opened down 1% after the CEO, current CEO, Mr. Gopinathan resigned. Obviously, he had some personal reasons to resign, and we had the announcement also of the designated CEO, Mr. Kirti, who will be taking the baton from Mr. Gopinathan. Obviously, during Mr. Gopinathan's tenure, we had a very good return, almost 22% CAGR for the stock of TCS, and there were 4 big buybacks which were announced from 2017 to 2022, worth more than 70,000 crores. So clearly, shareholders were rewarded under Mr. Gopinathan's tenure. And let's see whether or not the new CEO keeps up the promise. Obviously, the market had a knee-jerk reaction, but the stock recovered on the hopes that since Mr. Kirti has experience and heads the largest and the biggest vertical of TCS, which is the BFSI segment, we could see the stability in the top management level as far as TCS is concerned. So that's the story on TCS. If you look at the brokerages, obviously they are also surprised with the timing of the exit of Mr. Gopinathan, but yes, most of them have maintained a buy rating on the stock, especially if you look at Morgan Stanley, they are equal weight on the stock with a target of 3350. We also have CLSA, which has a buy rating on TCS with a target of 3550. CLSA believes that the transition is likely to be smooth and the succession planning will be a point of focus at this point in time, because usually TCS has historically seen internal candidates only taking over as MD and CEO versus companies like Infosys and Tech Mahindra, which have chosen outsiders to head the company. So let's see how this internal candidate really shapes up and creates wealth for its shareholders. Also in focus today was the stock of Bharat Forge, and if you look at Bharat Forge, today the stock was up almost 2.5% last time I checked. Yes, it closed almost 1.5% higher. Today we had the Defence Council, which approved procuring defence materials worth 70,000 crores, out of which the Government Defence Council will be ordering for 307 artillery tout guns. This is one order which will be shared between Tata Advanced Systems and Bharat Forge, and hence you could see some good bump up coming in for the top line of Bharat Forge with this defense order, as in when the actual order receipt comes in with these two companies. Obviously, if you look at the brokerages, Morgan Stanley has a buy rating on Bharat Forge with a target price of 1068. We also have the brokerage which believes that defense is one business area where the company could get some strong growth in the upcoming years. So this is the story of TCS and Bharat Forge. Let's move on to our next stock, which is DLF, wherein we have the brokerage Morgan Stanley bullish on the stock with a target price of 417. Now, if you look at DLF, it is in the news because their new residential project in Gurgaon has seen very strong bookings. In fact, with the launch, they have been able to book nearly 1,500 flats, and they have in cumulative number garnered booking worth $1 billion. Almost 8,000 crores of cash will be available to the company as and when the projects get stage wise expanded. But this cash, according to the brokerages, will be used for DLF's further land bank monetization and also repayment of debt. So clearly, this is one real estate stock which is in focus today. Also, the stock has seen some smart gains coming in. These are the stocks usually which we have focused from the brokerage side and the dealing room chatter. We also talk about the stocks which are in focus in the Nifty 500. We had the stocks like JK Paper, JBM Auto, Kalyan Jewellers, all of them rallying in trade by around 5 to 10%. In fact, we had the Kalyan Jewellers wherein it got added in the FTSE index, and because of the rebalancing today, the stock is up nearly 10%. JK Paper also, we have seen some good results coming in the third quarter, and yes, there was some buying in trade today also owing to the FTSE rebalancing. In the dying moments of trade around 327, we saw a huge block deal in Biocon. That stock is down nearly 9%, and nearly 2 crore shares or more traded at around 200 to 202. And with that block deal, we have seen the stock really crack in trade. But yes, the Monday morning opening is one thing that will be watched out for. Apart from that, we have Patanjali. That stock was down 5%. And remember, yesterday the stock exchanges said that the promoter shareholding will be frozen because of the non-compliance of the minimum public shareholding norms, and hence that stock is in focus. Obviously, today two banks, HDFC Bank, HDFC Limited, Kotak Mahindra Bank, all of them were in focus on the back of news. For HDFC Bank, there was the NCLT approval which has come through for the merger, and Kotak Bank, there was some buying on the back of the FTSE rebalancing, in which Kotak was included in this March review. So that's all from us. A lot of stocks that we have discussed. Have a happy weekend, and on Monday I'll be back with Santo at 3:30 p.m. with the closing bell.